Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, May 23rd, 2012, is sponsored by Realtik. All right, guys, we have a lot to cover today. Markets are seeing a sharp sell-off. SPY, which mirrors the S&P 500, down $1.72 on the day. Nasdaq is down 30. S&P 500 down 15. Dow is down 159. So again, it's basically a 1 to 1.25% sell-off on the markets today. And again, you can see how the rally took place on Monday, extended into Tuesday morning, and then worries from Europe came back out. And we saw the markets roll over yesterday, close flat, and then have a sharp sell-off today. And bottom line is it's all about Europe. I mean, there's a big meeting in Europe going on with a lot of the EU officials right now into tomorrow. We will get either positive or no news out of that. No news would be a negative, and I think the markets would continue to sell. There's a small chance they come out with some sort of positive announcement, in which way you would see a massive rally on Wall Street, probably in the tune of 200 plus points on the Dow Jones Industrial Average, minimally, if not maybe even more. So, I mean, there's some keys there we need to watch. Europe is continuing to be the forefront of what's causing the U.S. markets to go up or down. The reason why Europe is the forefront, because whatever happens in Europe affects the U.S. dollar. When Europe looks worse and worse, the dollar goes up because the euro is going down. Remember, currencies trade inverse to each other. So as one currency declines or depreciates, the other currency must appreciate. And that's how you keep rates and currencies balanced against each other, by doing that. In any case, bottom line is this. The dollar continues to soar, but there is a silver lining here. Take a look at the UUP, guys. I mean, look at this, just a 2-day move alone. Massive. I mean, this is a huge move. This is for the dollar. We're looking at the UUP, which is the ETF for the dollar. I mean, you don't see moves in currencies like this very often. And again, notice how this dollar is now back to the highs of the day. We'll see if it goes a little bit higher. But there is, again, a silver lining for the markets here, which I want to point out. I think it's unbelievably important right now, and that is what I'm going to show you next. There's a positive divergence developing here between the dollar and the markets. Essentially, the markets are the one that would get the positive benefit from this, and the dollar would get the negative. But let me just explain what I mean. All right, when you look at the dollar recently, it's had a massive, massive move up. Just in the last 2 days, the dollar has made new multi-month highs. I mean, here's the dollar up here, and here was the last pivot point. So again, this was the last pivot point just before the dollar pulled back here, which is when we had that ginormous rally on Monday. All right, that was the cause of the rally on Monday, the dollar pulling back. Things were looking better in Europe. Now the dollar again has reversed that and made new highs. Most people would think, oh, that's bad. Yet, there's something I want to show you. If you go to the SPY, here was the low when the dollar was at that previous high. All right, so this is, remember when we go back, let me just flip back and forth to the dollar here quickly. I want to explain this well. All right, so when the dollar was right here, the markets on the SPY were down here. Now, we've seen the dollar make new highs above the previous pivot, but the markets have not made new lows. The markets are trading up here. That's what's called a positive divergence. And that's something that, again, has piqued my interest here today. Now, it's not a game, set, match in terms of, oh, we're definitely going to rally up. What it tells us, though, is that the markets are closer to a bounce than not. All right? Because, again, if you think logically, the dollar, if we go back to the UUP chart, is only a little bit away from this double top right up here, which is going to be major resistance. Maybe if it goes there, the markets go back to their lows or maybe make a slightly lower low. But either way, when you pull off resistance up here, the markets will rally sharply, and the dollar will still be at these recent highs, just pulling off a little bit. All right, so I hope that makes sense to people. That's a very important point right now to understand in relation to what's going on in the markets. Having said that, let's go back to the intraday SPY chart here and flip over. And you can see, again, the markets have sold off sharply. We went into this trend line, which was a gap window. This is gap window from the rally we started on Monday. This is the low of the day on Monday. You can see 2 candles right there making those lows. The market then took up. We've erased that whole drop from the gap right to this point, and then we got a bounce, and now we're coming back in as the dollar inches back up again. But in all fairness, there's even an intraday positive divergence. Do you guys see the intraday positive divergence? All right, let's take a look at this. I love this stuff, guys. I'll spend all day if I have to. All right, here the market was at the highs, right? This is what, excuse me, here the dollar was at the high of the intraday session. Let me zoom in even a little bit more. All right, so here was the high, right? Very easy to see. At that high on the dollar, the SPY went to the lows of the day. All right, since then, the dollar pulled back a little bit and now is back to those same highs. In theory, because these trade inverse to each other, the markets should be back at their exact double bottom lows from this morning. Is that the case? Nope. Markets are off those lows. This continues to be positive divergences, guys. And again, am I significantly long? No. I have a couple long positions out there that are in the money. I have break-even stops on a majority. In fact, we even took one position off the table today because it hit our second target, which I want to cover right now. GG, check this out, guys. This is how good in the money stocks methodology is. It's going to blow you away right now. All right, so our entry price was down here on GG at basically 32 bucks and change, right down here at these lows. This is where we gave out the alert inside the research center, which, by the way, has a 7-day free trial for you to try. But in the hot charts and alerts, which is part of the research center, we gave out the alert to go long GG. Gold bounced. So did GG. Obviously, if gold's bouncing and GG is a gold miner, it makes sense that it's going to bounce. Awesome. We got up here to the 20 moving average. That was our first target right up here. We took half the position off the table. My second target was $36.75, which was higher. Now, this is how crazy it is. If you learn the charts and you know the charts, how you're going to pull this out of the hat, like we do here at InTheMoneyStocks.com, gold today is getting absolutely annihilated. Take a look at gold today, down $1.81. I mean, it's just an ugly, ugly day on gold. And this is the GLD, by the way. Gold was down as much as $40 today. I mean, just absolutely getting crushed. The markets, we know the markets are getting crushed too. So the markets are getting crushed, which is bad for stocks. Gold is getting crushed, which is bad for miners. And what does our play do? It goes up $1.80 today to target. All right, well, that's kind of nice. Look at that chart of GG. That's the one we had long. Why? Because honestly, the methodology, which is proprietary here, that we apply to stocks, has no cares about what the market is doing, what the stocks are doing individually, about this sector, that sector. It is specific to the chart of that stock that we're choosing to play long or short. And that will play out 9 out of 10 times, regardless of what the market's doing. If you choose it right and you read the technicals right, it will play out. Yes, it will. And today, GG is a fantastic example of that. Absolutely phenomenal example. All right, now I do have some other long positions out there. LVS, I took half off the table for a $2.50 gain yesterday. It's pulling back a little bit today, which is fine. In an ugly market, I'm expecting it to pull back a little bit. We have a break-even stop on the second half in the money. I mean, this is just riding the wave essentially, enjoying things here. All right, that's one of my other ones. And then JP Morgan I have long as well. I like JP Morgan a lot. Basically flat to slightly positive on this trade. I love it. I'm looking actively for other longs, though. I will say that, folks. I will say that. The reason being, again, those divergences, if I can find the right setup, and again, it's all about finding the right proprietary setup, which I will release in the hot charts and alerts, which is part of the research center, which you can take a 7-day free trial of, then it's going to be done. And I'll be making more money. Members here, guys, they're deciding which car do they want to buy, the Aston Martin or the Porsche. I mean, that's what's going on here in Traders Life 24/7. They're discussing because they've just cleaned up. We just continue to spit out the winners in this market environment with the average investors getting crushed, where people's 401ks are getting annihilated. We're positioning ourselves on the right side of the market. Even if you can't go short because you have a 401k and you can't do that, we still alert you that the market's going to go down. You just pull your money into cash. Wait for the market goes down. When we start taking longs again and we think the market's going to bounce, you put it right back in. You can utilize it whether you're an investor with a 401k, whether you're an investor with a regular trading account, or a swing trader, or even a day trader, which the intraday stock is for. Intraday stock chat. All right, guys. Bottom line is, it is what it is, and profits speak for themselves. I mean, that's where they are. Markets again, guys. Positive divergence continues. Great bounce here. I still think again, I'm going to stay cautious and not have too many longs out there. I have a small percentage of my portfolio is long right now. I have no shorts, by the way, no shorts anymore. I covered all my shorts last week on Friday when the markets flushed out, and since then we haven't made new lows, so it was a perfect opportunity to cover, and we did that because the technology and the proprietary analysis told us to. But bottom line is, I'm looking for the next long opportunity just for about a week or so, and I think we'll get it, and I think we'll be able to make plenty of money on it like we have been. And, again, 7-day free trial here at InTheMoneyStocks.com. I encourage you to come and try it. see what it's all about, make some money. Most of our members who just joined in the last week and took that 7-day free trial, they've already made literally enough from multiple years of the service. So, I mean, it speaks for itself right there. You come on, you become a full-fledged member, you get access to Traders Life 24/7. You can go talk to anyone on there about how much money they're making. All right, guys. Have a great evening. I got to get back to trading. Awesome profits continuing today. Nothing else to say. Market's getting crushed. We're making money. That's all I care about. Take care, guys. Have a great evening and good day. See you inside the Research Center.